Welcome back. You're with us on Money, Money, Money. And this week we're talking about the flurry of NFOs that have hit the street in 2021. A lot of these new fund offerings being on the passive side. Now, I just want to pull up a list of some of the passive funds that got launched this year. There's the SBI Nifty Next 50 Index. We know what that means. It's based on the Nifty Next 50 Index. The Kotak Nifty 50, which is pretty simple to understand. The Aditya Birla Sun Life Nifty 50 Equal Weight, which is a separate strategy. And we even got a UTI Nifty 200 Momentum 30 fund. So here is what I was talking about. Smart Beta. Help us understand this now, Kshitiz. We know that these funds are, based on certain factors. There's a brand new index devised going by that factor. But do you think they're a bit too evolved? I mean, are you convinced about some of these strategies? And which, evolved passive strategy would you back? I think you're on mute, Kshitiz. Yeah.
My apologies. The total pie, which is on right now, which is number of people who are investing in India, we have unique 3.5 crore folios only. So when you talk about passive, active, or in passive, true passive, or smart beta funds, there's a lot of scope. It's like EV is coming and we have petrol and diesel, which is already there. And it will coexist because the total pie is very small right now who's investing. Now, when you talk about a passive strategy, what we are saying right now, one is a pure passive fund, which are like an index fund. It is a replica of index, can be Nifty 50, Next 50, BSE 500, BSE 200, or healthcare or technology sector index. Or it can be a smart beta, which works on various models. It works on volatility index, it works on momentum, it works on zero debt companies, or it can work on, let's say, high growth companies with very high quality management. So when you talk about any smart beta strategy, it works like an index fund only, but the allocation is not as per the market cap. Like say Nifty 50, allocation is as per the market cap, a defined formula. When you say equal weight Nifty 50, that means all the Nifty 50 company will have 2% each. That's how it is. When you say a momentum 30 stocks out of BSE 200, then all those 30 companies, which have a right momentum, which is a positive momentum, they will do. Let's say if you say talk about any 30, one Edelweiss has Nifty 50 30, passive fund, which is there, which works on those companies which has a very low volatility, which is 30 companies which has a low volatility in Nifty, it works on that. So different type of strategies are there, and I'm saying all these strategies will coexist. Idea of a smart beta is to work out a strategy which can outbeat the existing index one. So it has done good in the past, but all I'm saying is the markets are so dynamic and we keep on learning on a daily basis. So all these strategies will coexist. Having said that, we are very new in this arena. So it will take some time for us to, maybe mature in this sector.
Absolutely. I think learning is the key word. As long as you can be active and, in charge of your portfolio, keep sort of understanding what the thought process behind that strategy is. And maybe it's for the more nuanced investors. Which brings me to the simpler, or let's say the more difficult question. Out of all these, 67 NFOs this year, right, Kaustubh? Which ones are your favorites?
So certainly, whatever. If you ask me, we are big believers of sort of ESG. And while, we've seen probably a flurry in the end of 2020 and 2021's probably been relatively slower in that sense. But, we think this is a space we're very excited about as an organization. And we really think that, India is going to see leaps and bounds of growth in this space. Investors, managers are already thinking about it, integrating it into their overall investing process. We've seen a whole host of funds that have come in. I think it's about time that investors start looking at that as an allocation, as a core allocation in their portfolios, before we become more broad-based, ESG as an overall investing philosophy rather than a fund-based approach. But just to test the waters, I would really think that investors should be looking at the sort of ESG strategies. The proof of the pudding is what's happened globally, right? India, it's a very short performance track record, but what we saw in the COVID crisis, the kind of downside protection that we saw from some of the sustainable funds was immense in the falling markets. The typical misconception is that ESG means you trade off a portion of the returns. That's not necessarily the case. I think that's something we're very excited about. Global funds is another thing I think, we're hoping sees a lot more traction. We've been talking about it for many, many years now, and I'm glad to definitely waking up to the concept, moving away from the traditional home bias and saying, hey, I want to be invested in these global markets companies that I easily relate to but don't necessarily always own. Let me be a part of that story of the large sort of companies that brands I'm so acquainted with.
And global funds, passive or active? Which way would you play it, Kaustubh?
If I just look at pure global trends, right? I mean, active managers in countries like the US have probably had a very hard time to beat the benchmark. So, as a probably first-time investor, maybe you want to look at a passive strategy. There are a bunch. We're not saying that we have some good active strategies also being managed from, a local context, which invested in the US markets and some of the other developed markets. So it'll really depend on the investor's interest. We're pretty much positive on both, and I think they both can coexist in investor portfolios.
Okay. Kshitiz, your turn. Now I'm going to pin you down to some names. At least give us some names. We've understood a lot of the sort of, overall nuances around it. But 67 new funds launched this year. Tell us the 1, 2 or 3 that you like the most.
So for me, the best category is Balanced Advantage Fund. And obviously, SBI being the largest, I'll take SBI Balanced Advantage Fund name. There's no recommendation. Please do your study at your end before investing.
Absolutely.
But the idea is that there are a lot of new investors into mutual fund this year. And we have seen that because of the low deposit rates on your fixed deposit or fixed income rates are very low. So many of the people have started coming and maybe parking some allocation in equity. And someone who's coming in for the first time and in these market levels where markets have gone up sharply up, then I think Balanced Advantage Fund is the right category. One should look at that category because it can move, just for the understanding for everyone, from 0 to 100% on equity allocation, depending on various parameters on which SBI BAF works. So second category, which I really like, is global participation, because in India, this trend has started in 2011 when Motilal firstly launched their NASDAQ fund. And after that, it started catching up in 2016-17 with Franklin US Opportunity and a few other funds. And on the global front, there are a couple of good initiatives which has happened in the last 7-8 months. One is your Axis Special Situation Fund. Second is your Kotak Innovative Fund. These are the 2 good funds. Again, do your research at your end before investing. And at the same time, I see, Subhi, there's a lot of gap when you talk about allocating into global markets, because many people, they think that these companies will do well if US will do well. But just for making it very simpler, most of the global products which are doing very well, whether it's Facebook, Apple, Netflix, Google, Microsoft, or take any name, we are the one who's contributing. Globally, people are contributing to that. So one should look at participating. And in global also, pick one index fund. You can pick between NASDAQ, FANG, or let's say S&P 500 US, and one active managed one, which is Axis and Kotak. You can pick among these funds.
Okay, so mix it up, a little bit of active as well as some passive. Got that. Thank you, gentlemen. I think that